Hello and welcome to this morning's weekly briefing. We've got lots to talk about. Hope you had a great weekend. Joe Biden's pushing for a stronger world bank in a way to combat China's influence. He's also pushing for stronger ties with Vietnam, as just established a trade deal. As well as that, the UK has uncovered spy networks within Westminster. In addition to that, the UK and the US are establishing stronger trade deals with India. And finally, Saudi Arabia is pushing for $100 oil mark per barrel, $100 per barrel for oil. And that's going to harm Biden going into this next presidential campaign. There's lots happening on the charts as well. We've got lots of gold opportunities, dollar opportunities with interesting insights into possible rate hikes that may relate to the dollar. As well as that, we've got lots to talk about on the economic calendar with US inflation coming out this week, as well as UK's employment figures. So there's lots to talk about, but let's get straight into it. Talking about Joe Biden pushing for a stronger world bank, and that's to combat China's rising influence. Now, this isn't the only issue that's been rising with China. I mean, we've been speaking about China a lot, but China's a big issue for Joe Biden at the moment. Now, Joe Biden wants to enlarge the World Bank's lending capacity for low-income and middle-income countries by $25 billion. If other countries also make similar pledges to this figure could rise to more than $100 billion. Emerging economies have been struggling to cope with rising interest rates and high energy prices, leaving them with struggling finances and opening the way for China to financially support them, worrying the US, which is a global superpower, because as we know, coming out of the Cold War, the US kind of reigned supreme as the global economic power. A lot of these developing countries relied on the US if it was to receive any investment for development. However, as the US has kind of taken its eye off the ball almost, focused more on other matters such as Russia and Ukraine, it seems that China stepped in a lot of these developing nations and low-income countries like in Africa, where China has invested lots of money in order to build roads and build different industries up in these countries in hopes of longer economic performance and greater gains for China. And so this is sort of the way that the US is trying to combat that and create an alternative. Now, the recent BRICS summit in South Africa has made US lawmakers increasingly worried with seeing the US possibly lose its grip on developing nations, which are now ever more looking to China. And we're seeing this with other countries saying that they want to kind of move into the BRICS, such as Argentina and many others. That we kind of wouldn't have on our main radar when it comes to economic development, or at least a high economic status. However, these are the sort of countries that are now wanting to kind of ally themselves more with the US's enemies in the global stage, such as Russia and China. Now, the US cabinet has been sure to announce that this is not a measure to combat China, but simply to offer a critical alternative to Beijing's Belt and Road Initiative. And this has been the initiative which kind of Beijing has been running to try and get as many nations and developing nations on board with their programs in terms of developing their economies. Now, despite murky relations recently with India, there is an Indian presidency of the G20 has embraced the plan of the US to expand the World Bank. And now this is important because we have to remember India is a part of the BRICS still. It still has a strong relation with countries like Russia and kind of China, despite their territory disputes, which is surprising. But it's kind of important to have this middle player on the side of the US going into this kind of matter. Now, it's still not clear who or how many specific pledges the Biden administration will secure alongside its own in terms of how to bolster the World Bank. And the US is also yet to achieve congressional approval for its section of the World Bank funding. And this could be hard to sell to Republicans, which are often not too keen on going outside their own country, especially with the more recent rise of isolationist lawmakers and presidential nominees such as Trump and such as Vivek more recently, and so that could be tough to sell to them. Now, the EU, whilst saying there was broad support for the issue, still has little consensus on the amount to donate. So, well, not donate, but push towards this cause. So it's kind of hard to decide actually how much. And in addition to the World Bank, Biden's also looking to increase funding for the IMF. But we'll have to see how this all turns out, considering that it's now only a year really until the end of the 2024 elections. And so this will be, we're kind of now getting into the run-up of where, you know, all these presidential nominees will be making promises to their voters on what they'll do. And often in times like this, you know, these sort of pledges end up getting put on the back foot because they're not the first point on the voters, you know, kind of interests. Now, as well as that, Vietnam and the US have upgraded relations in a move to counter China. Now, we know China's been quite aggressive and pushing quite aggressive in the South China Sea territories, such as Vietnam, Philippines, Taiwan. And, you know, this has kind of caused a lot of tension within those nations and also kind of pushed them more to the US. And now this is what we're seeing with Vietnam. Now, the US and Vietnam have signed a comprehensive strategic partnership after attending the G20 summit, and now we know that happened this week in New Delhi. Now, this status of a strategic comprehensive partnership with the US was one that was only previously reserved for China, Russia, India, and as of last year, South Korea and Vietnam. Not Vietnam. And now Vietnam is looking to gain this access to the US as well. Now, the Vietnamese have long avoided the move out of fear of upsetting Beijing. Now, Biden arrived in Vietnam after the G20 summit, with the US and its allies trying to appeal to the global South to build a worldwide consensus against Russia. Now, we know it's kind of been the West and, you know, the Europeans with the US that's kind of only been pushing for this Russia this kind of aggressive sentiment against the aggressive actions made by Russia in Ukraine. And this hasn't been totally shared by everyone else across the globe. And so it's now the attempt of the rest of these nations to try and push for other nations to join with them in going against Russia on this matter. Now, Vietnam is largely on the agenda of Washington as a result of being a frontline nation facing China's growing ambitions in the South China Sea. As I said, Biden is once again keen to say that the US is not looking to hurt China, with China's success benefiting all. But once again, this is coming after, you know, numerous policies and lots of rhetoric from the US that's kind of saying to the contrary, and, you know, banning a lot of trade with China, and you know, lots of poor rhetoric in relations to China's policies. As well as that, there was some tension shown between the two countries of the US and Vietnam, with Biden highlighting human rights as a priority, but Trong, the leader of Vietnam, warning against interference, like domestic policy interference. This all, of course, comes nearly half a century after the end of the Vietnamese war with the US. And Hanoi has also indicated it will boost ties with Australia and Singapore, and as well as that, Indonesia and Japan. So we're kind of starting to see Vietnam open up a bit more from being such a closed economy and closed foreign policy wide, and now trying to expand to these more pro-Western nations such as Australia, Singapore, Indonesia, and Japan. The deal between the US and Vietnam is also to support resilient semiconductor supply chains for the US industry. And as we know, a lot of these these South Asian and East Asian nations are big in this semiconductor um, supply chains kind of industry, and so it's interesting to see that another kind of nation is more open to working with the US in relation to this. Now, Vietnam has become a more open model of economy, with its now biggest, with now being the fastest economy in Asia last year, fastest growing economy in Asia last year, with the US being the biggest export market for it. And now, with big tech trying to diversify their supply chains away from China, Vietnam is likely to be a target area of production. So it's interesting to see how Vietnam's becoming more and more key on the world stage, with China now aggressing more around the areas of the South China Sea, and how this is kind of pushing other nations towards the US. Moving on from that, we also have Sunak accusing China of interfering with the UK's parliamentary democracy to talk about. Now, Rishi Sunak has told Chinese Premier Li Qian he has significant concerns about the Chinese interference in the UK's parliamentary democracy. Now, this is following the arrest of a British parliamentary researcher on suspicion of spying for Beijing. One man who is in his 20s worked as a parliamentary researcher and has been arrested on suspicion of spying for China. The man also has links to high officials in the Conservative Party, such as the Security Minister Tom Tugendhat, and this is the same guy that also ran for the Conservative Party leadership after Boris Johnson resigned. So we're starting to see, large issues to do with Chinese spying, and this is all adding to the tensions to do with China that's kind of coming out of this G20 meeting. The man had previously lived and worked in China and had access to Westminster for several years, and so this has kind of been a long-running issue, it seems, for the UK's parliamentary democracy. This comes after a warning about China's spying operations in the UK. I believe it was Russia that recently had some spies that were caught near a UK's military base, and so it seems that with this escalation of the Russian invasion into Ukraine, we're also seeing a lot of issues with spying within these nations. And Sunak told journalists that he'd confronted the Chinese premier over Beijing spying at the G20 summit in New Delhi, because, as we know, Xi Jinping did not attend the G20 summit, adding to tensions also. But moving on from that, we're now pivoting a bit away from China and moving more to India. So Joe Biden and Modi cement ties over defense and tech. Now, the US President Joe Biden and Modi's India's Prime Minister moved to cement ties in defense and technology during a meeting in New Delhi. Now, according to the White House Coordinator for Indo-Pacific Affairs, the latest meeting has shown that there was now an undeniable warmth and confidence between Modi and Biden. According to the coordinator, this bilateral relationship would be the most important of the 21st century for Washington. Now, as we know, India's part of the BRICS, as I spoke about earlier, but it's also one of the greatest and has the greatest prospect for growth kind of within the global economy aside from China. It has a strong industrial base that's growing, a strong growing population. It's a large landmass as well as population, and so with a growing film industry, tech industry, services industry and manufacturing industry, it's kind of the prime place to go if you're looking for trade deals. And so the US has been trying to kind of find a way to pull India away from the BRICS side of things to do with foreign policy and domestic policy and trade, taking them away from Russia and China and trying to move them more to the West, such as the UK and the USA, for better trade deals. Now, It is clear that the lack of presence of China and Russia at the G20 summit was a great disappointment for Modi. After all, they are part of the BRICS Pact, with their joint statement welcoming the approval of Congress for a commercial agreement between GE Aerospace and India's state-owned aeronautics firm to produce F414 jets. F414 jets in engines in India, and this was the joint statement between Modi and Biden. And so we're starting to see from this meeting, better relations in terms of trade pacts and collaboration in terms of innovation. Now, US Navy vessels will now also be maintained in India, as well as providing MQ-9B drones to India. And this is interesting, and also kind of the most unsurprising of the coming out of the talks, mainly due to the fact that China and India have a long-going border dispute, and this has always kind of pushed India towards wanting its own domestic industry for producing weapons and equipment, with China and Russia actually providing the most equipment for India. And so now India's trying to kind of move themselves away from that and be stable on their own. After all, they are, becoming a global economic superpower, so they'll want to move away from being so reliant on other countries to do with their defense. As well as that, the two countries have said they'll boost their cooperation within the nuclear energy sector, and Biden has also supported India's bid for a permanent seat on the UN Security Council. And this is big. I mean, the UN Security Council is kind of, where everyone sits if you're the leader within the globe, and you're seen as really a global superpower. And so by Biden pushing for this for India, it really will likely strengthen those ties between the two countries. Now, on the same note, Sunak and Modi have also been in trade talks following the G20 summit, with both Sunak and Modi encouraging ministers and officials to work at pace to secure a trade deal. Now, the two met with a strikingly warm chemistry, and Sunak expressed confidence that London and New Delhi could work through the hurdles of stalling a free trade agreement, with there being a desire on both sides for a trade deal to be concluded. Now, Sunak also played the prospect of a deeper bilateral cooperation on defence and security, education and research after his meeting with Modi, with India, according to the Prime Minister, being one of the most important geopolitical actors. And that's following what I just said before about it being a growing economic superpower, and with that a greater geopolitical significance. And as well as that, Britain primarily wants to expand a market for whiskey and cars in India, as well as investment into services, whilst India wants to bolster its export of manufactured goods and services to the UK and secure additional work visas for its citizens. Because as we know, great growth for India has come from its ability for workers to work abroad, especially in almost new countries in the Middle East, such as Qatar and the United Arab Emirates, where we've seen a lot of foreign workers go and work and send money home if they can. Now, that's all for the talks to do with Sunak and Modi, but things are looking positive in relation to them gaining and establishing a strong trade deal with one another. But the last article to talk about, which is very important, is Saudi Arabia's push for a $100 a barrel oil. Now, Saudi Arabia pushed for a $100 a barrel oil, risking Joe Biden's record on the US economy. Now, we know Joe Biden struggled with inflation in the US as a result of Russia's invasion into Ukraine, which destabilized oil prices around the world and sent them flying high. Joe Biden kind of combated this by releasing a lot of the US oil reserves, whilst restricting any extra drilling around the US for more oil. This came at quite a bit of this came at quite a large cost of many Republicans and right wingers in the US criticizing Joe Biden for this move, as they kind of cited him focusing more on the environment rather than the US success and US consumers' pocket. And so with the lead up to the US presidential elections coming next year, it's interesting to see how this will play out if Saudi Arabia essentially ruin Joe Biden's plans to reduce inflation, as well as the Fed's plans to reduce inflation, by causing such a spike in oil prices. Because Brent crude oil this week, or last week really, breached $90 a barrel for the first time in 2023 after Riyadh and Moscow extended supply cuts to the end of the year. This, as a result, put relations between Saudi Arabia and Washington at risk. The extensions of the cuts come at a delicate time when Biden is highlighting a strengthened economy and slowing inflation as a sign that Bidenomics is working. And with pump prices playing an outsized role in voter perceptions of the economy, high fuel costs could be the end of Joe Biden. This could also further complicate the Fed's decision on whether to raise rates, because as we know, coming out of last week, we spoke about how it's likely that the Fed will just keep rates at the point where it is, and it's looking good for US inflation following the US job figures. However, following kind of this news that the US inflation might be now destabilized once again by rising oil prices, this may mess with the Fed, who now have to continue to raise rates and possibly damage the US economy. And slower price rises in other sectors, however, may help offset energy-fueled inflation, but oil movements could easily return annual inflation to at least 4% in September, compared with 3.2% now, effectively, ruining kind of the gains made by Biden that just comes with the numerical relationship between inflation and yearly figures that we were seeing, that fall in inflation figures coming after the highs of last year, but now there's going to be issues with that following this rise in oil prices. And in relation to the election, as I said earlier, Donald Trump promises to focus on drilling for US oil and bringing gas prices down, but Biden, following the Russian invasion into Ukraine, released federal emergency stockpiles to tame the price rise, but now these reserves are down to its lowest level since 1983. So Joe Biden can't even, deal with the issue this time by just releasing US reserves. But overall, it seems Saudi Arabia may be using its position to play in a tight US election, and as a result just increase their dominance over the US and the global stage. So it's interesting to see how this will play out, how it might affect the elections, and see how it plays out on the charts, because now we're done with the articles and we're moving on to the charts, with the first to talk about being US indices. Now, they've seemed to hover following the retracement that we saw last week, and so going into this week, it'll be interesting to see how they might react to this level. Now, as I said last week, they're kind of sitting around these areas of Fibonacci points. So as you can see, the 61.8 and the 50.0 point on the Dow Jones, which is kind of around these areas of liquidity over here, but it's kind of consolidating around this area following the data releases from last week. And with US inflation figures coming out this week, it'll be interesting to see how it might affect the US indices to push it to the upside or the downside, depending on the inflation figures, because obviously whatever the inflation figures are also affects the way the Fed's going to raise or not raise or decrease rates, which is obviously going to affect the Dow Jones and other indices such as the US 100, which, like the Dow Jones, is consolidating around these areas after following the retracement, and likewise on the S&P 500. But moving on from that, the dollar also starts to consolidate, almost forming a flag, kind of an upward consolidation pattern here, which isn't looking too good for the dollar. However, saying that, following the US oil's news in relation to Saudi Arabia pushing for a $100 barrel oil, we could actually see a rise in the dollar as a result of increased likelihoods of raising rates further by the Fed. This comes obviously because if you have higher inflation, the Fed generally tries to combat that by raising rates further. With higher rates, more money is going to go into the dollar to kind of earn that interest, and as a result we may see the dollar peak higher and break out from this area of consolidation coming into this week, and we'll also see this reflected on the other pairs. That being said, it does seem like it's overbought here, with the RSI reflecting that with a divergence, as we can see here. We've got a negative bearish divergence with we're making higher highs, but on the RSI we're seeing we're making lower highs, and so it'll be interesting to see where it's going to actually go down as a result of the technical analysis, because obviously here it looks overbought. We broke above this high, we're now consolidating, we've got bearish divergence, but that said, the fundamentals are looking different, so it'll be interesting to see how that will play out. A next pair to talk about is the euro dollar. Now this is in relation to the dollar that we just spoke about, because obviously we've been speaking about this area of support for a long time now, and we spoke about the fact that when it reaches here, it has a high likelihood of moving higher as a result of the high percentage of buy orders that are likely to be around this position. But that said, if we do see rate increases, that's obviously going to push the dollar higher, as I said, and cause it to break lower. So with this oil news coming out and US inflation figures coming out this week, it'll be interesting to see whether this area is used just for a short retracement to the upside before moving lower, or possibly we might just see a complete breakthrough through this area. But keep your eyes on this zone to see whether we'll actually see a break of this lowest low on the charts. Moving on from that, we've got US yen. Now, yen news came out last week to do with GDP growth. It came in below expectations, and I don't believe we've got too much yen news coming out this week. Only dollar. So it's looking like a good pair to trade based on dollar news. And as we spoke about before, this was kind of the area of resistance that we spoke about is going to be hard for the dollar yen to break above. But when it does break above, we know it'll break and kind of hook back on itself to make another push higher. And we saw that with this double top, where I said it's likely to now push down to this area of liquidity, which it did. Kind of came down, grabbed this area of liquidity where the buy orders were, moved higher, but it's kind of made a triple top here and moved again down, coming into this evening's and this morning's market session. And so it'll be interesting to see how, with that possibly more positive news on the dollar, whether we'll see this liquidity punched again and move higher, or in fact it will just break below as a result of being overbought, because once again we're kind of seeing another RSI divergence take place down there. Now, there isn't much news on gold. It is consolidating, but with so much significance around the dollar at the moment, with inflation figures coming out this week, as well as these issues around Brent crude oil as a result of Saudi Arabia's kind of artificial scarcity tightening. It'll be interesting to see how gold will play out. It's likely to move higher out of reasons of world tensions that we're seeing, and also out of issues of people wanting to move their money into a more secure and safe asset if we see higher inflation. But that said, if it's true that rate hikes are coming as a result of these issues to do with oil prices rising, then it's quite possible that we'll also see gold move to the downside. But at the moment, we're seeing this consolidation around this 50% Fibonacci area, so it'll be interesting to see what comes of that. And finally, in relation to the oil talks that we've had around Saudi Arabia, it's interesting to see how it's reacting to this triple top that it's kind of created up here coming out of last week. Now, it's created a triple top, as I said, but if it's true that Saudi Arabia really is pushing for that $100 a barrel oil for oil this year, then it's likely that we'll see a push above this area and possibly a hook back like we saw in USD JPY before it rallies higher to that 100 mark. So it'll be interesting to see how it plays off this area. But like the other assets that we've looked at before, everything's kind of looking quite overbought at the moment. We've had a strong rally and now it's starting to consolidate with higher, with lower highs. If we can see here, that was the highest high, then lower high, now lower high again, all around this area of resistance. It'll be interesting to see whether it's actually going to move lower before it moves higher. So those are the areas to look at on the chart, and keep your eyes open to see if any opportunities arise around that. But the final things to talk about obviously is the economic calendar and what's coming up within the next 7 days in relation to that. Now, the first thing to talk about is, of course, new one loans. Now, that came out actually on Sunday, but obviously the one has been under quite some stress recently with growing Chinese economic doom and kind of Chinese economic fears. But as well as that, we've had UK employment figures which are coming out this week, this Monday, and as well as this Tuesday, sorry. And as well as that, we've got European economic growth sentiment, as well as German economic growth sentiment. In addition to that, we've also got UK's GDP growth figures and US inflation figures that we spoke about before. As well as that, we've got Aussie employment figures coming out, as well as the ECB interest rate decision. We kind of spoke about the ECB last week, but it's likely it's going to stay around that 4.25 area, but keep your eyes open on that. And as well as that, we've got retail sales coming out of the US, and finally, the ECB press conference. But that's all for this week in relation to looking ahead. I hope you have a great trading week. Obviously, I'll be making videos all this week and Monday every morning. If you've made it to this point in the video, please subscribe. And yeah, have a great trading week. Bye.